Well, good day there, subscribers. I hope you guys are all doing great out there. I just want to let you guys know of a couple trades I placed a few hours before the market closed here today. It's about $10,000 worth into two different stocks, and I kind of want to talk about why I bought some more of each of these stocks. I kind of want to show you guys the price I bought these stocks at, how many shares I was able to get and things like that, and kind of go through why I decided to go ahead and purchase some more of both of these stocks here today. I hope you guys enjoy this, just me kind of sharing this with you guys, and hit a thumbs up if you do. By the way, if you're coming to the conference, you got less than 2 weeks to get your tickets. First link down there in the description, and come spend a day with Graham, Stephan, and me around personal branding, stock market investing, real estate investing. First off here, Alibaba. So I bought some more Alibaba shares. It was a little over $5,000 worth of Alibaba shares here, 35 shares in total. I got them for around $144.12 a share. Like I said, just over a $5,000 trade there. And I also ended up buying some Skyworks Solutions that I bought about 65 shares at $75.96 here. That was just under a $5,000 trade. So around $10,000 deployed in total there in Skyworks and Alibaba. Alibaba reported last week earnings. Skyworks just reported yesterday. So I went and made some moves there. Okay, let's talk about Alibaba first. Okay, so Alibaba, there are a few reasons why I wanted to buy some more Alibaba shares. Okay, one is the mobile monthly active users continues to increase at a pretty significant rate for this company. If we look here in this latest quarter, they now have 666 million mobile monthly active users, okay, of one of Alibaba's platforms, all right? That compares to about 549 million at the same time last year, all right? A significant uptake there, all right? Then we look at their businesses across the board. Alibaba, I always talk to you guys about, I love this business because it has so many growth vectors going for it. In Alibaba's case, this company grew revenues 54% in the last quarter year over year. That's ridiculous, okay? But it's strong growth across everything. So it's not just like their retail business. Actually, their retail business is some of the, I guess you could say, slower growth there, right? 25% in customer management as far as a China commerce retail, 31% up in commissions there, which is very nice numbers, nothing to sneeze at. But what impresses me the most is the cloud computing segment, okay? Cloud computing, we're talking about revenues were up 90% year over year. Cloud is probably the most exciting business for Alibaba in the future. It's very similar to what happened with Amazon, where Amazon was building out their cloud business. Not a lot of people saw it. Now a lot of Amazon's value is because of Amazon Web Services and how much profit that's starting to make Amazon at this point in time, all right? So if we look here at the bottom line numbers, okay? As far as the bottom line, a lot of their businesses lose them money right now on the bottom line, all right? It's their retail side of their business is what's bringing in all the profit on the bottom line. The rest of their businesses, especially a lot of the entertainment and whatnot, that loses them money right now. A lot of their food delivery and a lot of special things are trying to get done there. These are things that are losing them money right now, but have a great opportunity to make them a lot of money long term, all right? Cloud computing is the most interesting thing because cloud computing is losing them a slight bit of money right now because they're continuing to expand on that top line there with the cloud business. But what I see is in about a year to 1 to 3 years is basically all of a sudden the cloud business, in my opinion, is going to go from worrying about just top line growth and expanding to all of a sudden it's going to start bringing in a lot of money on the bottom line. It's very similar business model from their cloud business that Amazon has with Amazon Web Services, where Amazon Web Services lost Amazon money for quite a while they continue to build that up. But now you look at Amazon's business, and Amazon Web Services is actually much more profitable than their retail side of the business. And the CEO of Alibaba recently, just a couple days ago, came out and said that he expects the cloud business of Alibaba to be bigger than the retail side of the business. He expects that to be the biggest business for Alibaba. I do as well, especially if you're looking at it from the bottom line and what that's going to do for the company, bottom line long term. We just don't know when the actual profits will start pouring in, but regardless, I want them to focus on grabbing market share for now because there's so much up for stake here. Everybody's trying to get in the cloud business, and we know Amazon and Microsoft are big players here. I think Alibaba has a great opportunity to be the number one or number two biggest player in cloud if you're looking at the next 5 to 10 years. I think the only one that could probably beat them will probably be Amazon in the end, but I think Alibaba has a great opportunity to make a massive, massive cloud business in the future, especially when you look at how much of an advantage they're going to have in the Chinese market. We're talking about 1.3, 1.4 billion people there, a massive amount of businesses. Almost all businesses are starting to go toward the cloud. Huge opportunity. Now, I was almost going to buy some JD.com shares, okay? I was almost going to buy some JD shares, and JD today hit $21, and it's really interesting to me. I mean, I think JD has a big opportunity in retail. What it came down to in the end, you know, should I put some more money in BABA, or should I put some new money for the first time in JD? What it came down to in the end for me in this move was JD doesn't have nearly as many growth vectors going for it as Alibaba. Alibaba has so many growth vectors going for it, including the cloud, which is, like I said, probably going to be the biggest business and going in the future for the company. It has so many growth levers that I just looked at Alibaba here at $140 something, and I'm like, I gotta get some more Alibaba. That's all it came down to in the end when we're looking at JD versus BABA. Just more growth levers for BABA, okay? Now, Skyworks Solutions, okay? So Skyworks Solutions reported earnings yesterday, and Wall Street did not take it well, okay? If we look at Skyworks Solutions right now, there's a company that's now trading at a forward P under 9, okay? A forward P under 9 is ridiculous for this business, all right? It's been priced in, like, you know, when you start getting under a forward P of 10, when you start to get to those levels, it's basically like Wall Street saying, like, you have nothing going for you, you're not going to grow anymore, something like that, when really this company has a lot of unbelievable long-term growth vectors in it, okay? So if you look at Skyworks business, they are big in connectivity, okay? And you look at the self-driving movement in cars and how that's going to explore over the next, you know, 5 to 10 years. We're going to go from a society where very few people have self-driving cars to over the next 5 to 10 years, the most people out there will have self-driving cars. The 5G opportunity with connected home devices, all these things got to be connected. Skyworks Solutions is the perfect player for all this, okay? Wearables, smart audio, the speakers that go in homes and all those type of things, all the connectivity. This is all massive opportunity for Skyworks Solutions. They are executing on this already, and these things are just getting more and more popular over time, all right? This is one of my favorite charts out of Skyworks Solutions right here. This shows you what the opportunity was for Skyworks in past models of phones, for instance, versus what it's going to be in 5G. So if you're looking back at the flip phone days, right, in the 2G movement, Skyworks Solutions really only had a possibility of about $3 worth of content per flip phone, okay? Then we got to move into kind of like, let's say, the dumb smartphone age, where it was like phones that were almost smartphones, but they weren't quite smartphones. They were like 3G phones, remember? You know, $8 was about their opportunity per phone, okay? So they had about $8 worth of content to sell into a 3G phone. 4G comes around, and now it's a much, much bigger opportunity for them, okay? 4G phones represent about an $18 opportunity for them in a normal smartphone nowadays. But in 5G, we're talking about a $25 opportunity per phone, okay? Because of how many filters and bands are going in these new future phones with 5G and whatnot. It's just a really, really, really big opportunity for Skyworks that I think the market is just missing out on right now because it's so focused on what's going on in the short-term smartphone market, all right? And if you're looking at this, all right, the mobile is not where the growth is. You know, analysts and whatnot, they're like, oh, you know, high-end smartphones can't grow, and tablets can't grow, and laptops, and maybe that's true, okay? That's probably true. I think it'll grow once again when actually 5G comes out, but in the short term at least, yeah, mobile probably can't grow, and so it's not a big growth vector for Skyworks Solutions. Where the growth is going to be at for Skyworks Solutions is the Internet of Things, okay, and all the emerging technologies like artificial intelligence, virtual reality, autonomous driving, machine learning. All those things are a massive opportunity, and all those things are going to explode over, you know, between 2020 and 2030, okay? So you're looking at so many big growth vectors for Skyworks Solutions, and the stock is priced like it's the end of the world right now, and I'm just looking at it and I'm like, it's not the end of the world. This company has executed phenomenally in the past, has executed amazing in the past. So if they don't execute on 5G, it would pretty much be the first time ever this company has failed in a big way. I believe in this management team a lot. They've proven a lot over the last 5 to 10 years. Why should I not believe in them executing on this vision? They're so well positioned for 5G that as 5G, you know, gets into the mainstream, starting probably in the back half of 2019, and then from 2020 on, it's going to be a mainstream thing, right? They're so well positioned for this, guys, that I look at this stock and it's just disgusting value in my opinion, okay? And all you're gonna find right now is Alibaba is caught up in the short-term worries of what's going on in China. Oh my gosh, this is gonna be a recession, these tariffs, that whole situation. That's totally, where Alibaba's at right now. And once again, they just grew revenues 54%, and they can grow revenues phenomenally regardless of what pretty much happens in China, okay? Skyworks Solutions is caught in this negativity right now. That's short-term. Analysts are talking about it. Smartphones can't grow. They're not going to be able to grow units of smartphones right now, especially the high-end players like the Apples and Samsungs that are, some of Skyworks' biggest customers. And that's just the whole short-term worries right now. And you see Alibaba stock and Skyworks Solutions stocks at, right around 52-week lows. And I'm looking at them here and I'm saying, I got to get some more of these shares, because if you're looking at this from any type of 3, 5, 7-year basis, these companies are like steals at this price, in my personal opinion. When I just look at it, it's just, you just literally look at the facts, you look at all the opportunity in front of these companies, and you see that, in my opinion, 3, 5, 7 years from now, we're going to be looking at Skyworks at $70 and saying, what a joke that was. We're going to be looking at Alibaba saying, remember when Alibaba was $140 a share? Because these companies just have such big growth opportunities in front of them. So that's why I went and did it, guys. Deployed about 10K today, and I'll continue to be a buyer of stocks. I'm not a huge buyer in like November, December, January. I usually start buying again heavy in February, but if these prices continue on some of these type of companies that have big growth vectors in front of them and are trading at very low valuations, I'll continue to be a buyer over the next few months. So hope you guys enjoyed this. Hope you enjoyed me sharing this with you. Hit a thumbs up if you did. Thank you for watching and have a great day.